Hello guys, this is the lesson 2 of the Forex Beginner Course 2.0. I hope you are of course excited to be on this lesson number 2. So if you haven't watched lesson number 1, I highly recommend you to watch lesson number 1 before you can come here on lesson number 2. It is there on top on the suggestions, so just click on it, start with number 1 and then come on number 2. Although of course on number 2 we are still continuing with the terminology inside Forex, but now we are going to discuss more about more inside your MetaTrader, the terminology inside your MetaTrader. So let's get into it. So the first thing that we are going to start with is your lot size. So what is the lot size? Is the unit measure of a price in Forex, such like 0,01 lot is equals to 1 unit pips. That means of any currency. And then we use lot sizes, of course, to measure your the unit of price that you are taking, the amount of price are you getting in with. So your lot size 1 or the standard lot 1 is equals to 100,000 units. That means $100,000. And then your one micro lot is that means 0,10 is equals to 10,000 units. It means $10,000. And then your one mini lot means that you are on 1,000 units. Simply means that 1,000 US dollars. Actually, this is the amount now that you are supposed to have to trade any of those units. But fortunate enough, we have our leverage, which I will talk about in the moment, which allows you to be able to trade with less of the money that is needed actually to execute those trades. So this essentially means that you must have, this essentially means that you must have in your account to trade a certain currency. Yes, as I've mentioned, and then of course I have said that we'll speak about your leverage, how your leverage comes to play in terms of you being able to trade your micro lot or your standard lot with just 100 US dollars in your account. Of course, as you can see here, guys, on the MetaTrader app, this is where you adjust your lot size. You can increase your lot size by one mini lot, or you can just increase by your micro lots, something like that. That means you are just increasing the units that you are actually buying. And then guys, the more you increase, the more money you can be able to make, or you will actually essentially lose. So the more the lot size, the greater chances of a far greater win or a far greater loss. So when you actually do this, make sure that guys your account supports your lot size. Do not take such a huge lot size that you know that even if your strategy it is right, but now you have taken such a big lot size that actually does not support your strategy, is going to be a danger. It's going to be a danger for you, of course. Yeah, the error now is pointing at your lot size. That's your lot size there. Now you know. And then the second thing that we are going to discuss about, of course, is your leverage. how your leverage comes into play. So your leverage represents something like a loan which brokers use to extend the client's capital with, as I have said, guys. So to explain this in a brief manner, ne? If your broker's leverage is like 1 is to 100, it means that per $1 that you have in your account, you get $100 to represent it in the forex market. Under your broker, of course, it is the privilege, I can say, leverage privilege, I can say, that your broker gives you. So if you have like $10 in your account, essentially you have the leverage. If having the leverage of 1 is to 100, it means that you have 1,000 US dollars in your account. It's more like you have 1,000 US dollars in your account. So your leverage is more like your broker putting on their money, on your behalf, so that you can have what, so that you can make money a bit faster. But as much as you can make money a bit faster, of course, in as much as you can lose that money. So leverage is good, but make sure that you take advantage of the leverage in a way that is a smarter way. So make sure that you know how to use your lot sizes, of course, unless you are an aggressive trader. You are looking for those kind of positions where you make a lot or you just lose your whole of or the whole of your account. So yes, yeah, so this essentially means that with 1 is to 100, having $10, you can trade the lot size of 0.01, which is your max lot size that you can trade with the leverage of 1 is to 100, having $10 in your account. And then having the leverage of 1 is to 500, having the same amount of $10, it means that you can the maximum amount of of lot size you can trade is 0.05. So yes, that's what actually leverage means. And then let's get to another one, which is pips. Pips, the acronym pips means percentage in point or price interest point. That's your pip. It essentially defines your price, your price. Yes, it's more like a measure of your price. Pip is the smallest price move that an exchange can make based on the forex market conversion. Although yes, it is the smallest price that the forex market can make, it is also the price itself. You see, yeah, in forex market we don't call the money or the money that your price is at by dollars or by any currency. We use pips, which is your, of course, your percentage in point to define that price in the forex market. So here, if the price is at 0.97160, the bolden numbers represents 6 pips or 60 points. So yes, essentially these two numbers here, this number here is the one that represents your pip, and then this whole numbers here represents your point. So yes, essentially here, how many pips you have is that at this price is that you have your 9,716 pips. 9,716 pips, not 97 pips, but you have 97,000 pips. No, you have 97,000 points, but you have 9,716 pips. You should get that. And then also in the Japanese, of course, in the Japanese, it's a bit more different than you'll realize that than any other any other market, because the Japanese yen is a bit the current is a bit smaller than way smaller in fact than most of the currencies in the market. So the point, the number before the point is a bit huge compared to other ones. As you can see here, starts with zero, and then yes, of course, it's still the same. Your This is more like your 4.5 pips, which is 45 points. Yes, you will see such numbers, the three digits after, where there is Japanese yen. Where there's Japanese yen, you'll see this kind of price. So let's get to your next terminology. Oh, of course. Let me show you where do you find your pips. So here, this is essentially where you see your price. This is your price, guys. As you can see, your price is at your 130,703. Of course, this is your price there. This is where you find your price. So generally, you should be able to notice in every pair that you have that you will have your price on your I can say right hand side. Yes, I can say right hand side. Yeah, this is where you will see your price. So the current price is it is this one where there's a green line. Of course, this is where the current price of the market is. So let's move on. Now, of course, since we have talked much about the price, I'm sure you must be wondering exactly what is this price. So let's talk about it. The price action. Of course, what is this price action? It is a description of how the market moves in, and then in its repetitive behavior. I would say that, of course, price action is more like a bunch of repetitive behaviors, your supply, your demands, your yeah, many repetitive behaviors. It is the trends, the key support, and the resistance level that you find in your of course your analysis in the market, which we will get to it, of course. Examples of these repetitive behaviors, which we will talk about, and then we'll talk also about more. This is just an example. It is your MW formations, which they like to call them the double bottom, the double top, something like that. Your key support and resistance, where you have the huge demand or the huge supply between your daily trading markets, of course. And then we have your bullish trends, where there's an uptrend. Bullish means an uptrend. And then you have your bearish trend, which is your downtrend. And we have your consolidation, where essentially market is more like going up and down, but on a consolidation state. It's more like kind of in between. It does not go up, it does not go down, it's just in the middle, but it's going on a repetitive move, more like up down up down up down in a straight line manner. So that's how it is. And then uh, here is your I would say uptrend. This is your bullish market, of course. This is your trend line, or I like to call it an MA, which in moving average. This is your moving average line. And then also this is, guys, your key support. You see here your key support. The reason why is your key support, because of after it is broken, it was first your key resistance. After the market has broken the resistance line, it is now tend from the resistance to be a support. You can see now every time when the market reaches this line, it does what? It retrenches. It goes up, and then it goes to the line, and then it gets back to the essentially to the move again up. So it's more like it supports the market to do what? To go ahead up. So it's more like a support on that market, to make sure that now the market stays on that, above that price, above that particular price over here. So also, as you can see guys, here also the same support, here also got the same support. So guys, it is essentially these type of repetitive movements that we catch as a professional trader. You have your analysis, of course, the FST 100 cash, which is part of your indices. So this kind of behavior that the market is doing, it is actually, we as the professional traders look at, to make money out of forex, of course. So it is in your eyes to perfect these things. If you have a good eye, and then you have perfected this thing, going through many analysis, seeing the mistakes that you can, or the misconceptions that you can make out of this. And then as you can see guys, this has made a 10 here, and then also this has made a 10 here. So catching, and then this is your actually your head and bottom, or like head and shoulders, I mean, this is your head, this is your shoulders. So uh, this type of movements guys, as 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 someone who has a good eye, or who has experience on the market, you see them quite often, you analyze them, and then the essentially the things that we trade, the things that we make money out of. This is your technical analysis, by the way. It's not your fundamental, but it is your technical analysis. But remember that anything technical, it is made by the fundamental, especially something that is more likely to break your key support level on the FTSE 100, of course, can be your news. Say that one of the or two of the companies of these indices of this index have had bad news. So it is more likely that, of course, the support level will be broken down by an extremely volatile candlestick that will break down because of that news. So you should be able to do what? To watch out for such news, of course. Don't just trade your technical analysis, and watch out as much as you trade your technical. Watch out for the fundamentals, so that you know what's gonna break the patterns, what's gonna make a new pattern, something like that, of course. So let's move on. So we are moving on to candlesticks right now. Candlesticks are a way of displaying information about your assets or your instrument, of course, their price movement. Essentially, candlesticks have three major points. Of course, there are specific points that creates a candlestick. You have your open, you have your close, and you have your wicks. Of course, that's how essentially how we see your candlestick patterns. So candlesticks are going in different directions. You have your up and down candlesticks, and then they have two different colors, which can set you can set, of course, in your MetaTrader according to your preferences. I like my red and green. Essentially, the red means then the down, and then the blue, I mean the green means up. Yeah, which are the ones that are commonly used. But most of the time, you can find your black and white, which you will find them mostly in your MT4, MetaTrader number 4. Here are your candlesticks, guys. So on the green, which is essentially means your bullish candlestick means up, uh, you have your opening price here down below. So when you see candlestick, you know that that is going up. You know that where below is your open price. It means by it is where your candlestick has opened, and then where on top is where your candlestick have closed, and then your shadows or your wicks is where the price have reached, but it has not really gone to. So let's say that if the price opens here, when it goes down, it's gonna turn a bit reddish, but because of now it did not actually proceed to go down. It actually tends to go up. Now what remains there is your shadow or is your wick. It's no longer your uh, possible bearish candlestick, the reddish candlestick, but it's now your green, of course, because of it's moving up from the opening. And then you can see when this essentially means that the price has tried to move up more compared to the close price. That means it was green, there was this green here, but what the price have done, it has reduced and then it has closed over here, depending of course on your time frame. You can have your 1 minute candlestick, you have your 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, 1 month candlesticks. So essentially, if I have my 1 hour candlestick over here, that means this candlestick has taken 1 hour for it to open until it gets to be closed. If it's 1 minute, for it to be able to open until it's closed, it took only 1 minute. So candlesticks is more like a measure also of time, open from open to close. Of course, when it's coming to your bearish candlesticks, your down candlesticks, the open price has to be of course on top. So this shadow represents where your candlestick could have gone green. It has gone up a little, so it was green on that moment. But when it goes back down, that means it is now going on the bearish side, where it turns red again, of course. So your candlesticks has proceeded to be red, of course. This is your full body, so the open price should be on top, of course. And then because of course something that goes down, it starts from the top. So here it is where the candlestick closed, but it did not just close here. It attempted, of course, to go down on the lower price, but it has essentially gone back, and then it has closed here on the when the 1 hour hits the mark, the 30 minutes hits the mark, any time frame, of course, that you are using, it has decided to close here. And then of course this is your high price, low price, low price, the candlestick has reached. So this is your bullish candlestick, and then this is your bearish candlestick. Know these candlesticks, of course, guys, and this is your body, this is your body. They are important in your study. Of course, there are candlestick patterns that we forex traders use to see or to speculate the market. Of course, you have your bullish engulfing, your bearish engulfing, your hammer, of course, your shooting stars. There are many, many candlesticks, of course, guys, that you should consider when you are a professional trader, of course, to study your patterns in the forex market. So, yeah, that's it for the candlesticks. Let's move on, of course, to yeah, I don't know what got. Okay, let us proceed inside the MetaTrader app. Now I'm gonna show you guys what's inside the MetaTrader app. Of course, before of course, guys, before I show you this, uh, we are going to, of course, you have to, of course, download your MetaTrader app on Google Play, and then you have to download your MetaTrader app on your PC. Of course, you can go to your broker, which my recommended brokers are your XM broker, XM Global Broker, or your XNES, which are essentially great for beginners, great for a start off. Of course, guys, I know them; they are very good, good spread and everything, lightning fast withdrawals and deposits. So you guys, you should try them on. And also, I also recommend the reef, which I did not mention over here. Also good for beginners, great for deposits, I like it there, and great also for withdrawals. The reef also has more of synthetic instruments where you can trade binary either up and down. Incredible things, of course, that you should know about. Other ways to make money, of course, in the forex market. It's more like you are betting on 0 or 1, up or down, something like that, within a specific time frame. Yes. So now I'm going to show you how to log in your MetaTrader app. Of course, say that you have now had your broker fully registered. They've given you, of course, your login account, and then they've given you your password, or you have created your password. So this is what you have to do. The first step is that when you enter your MetaTrader app, what you will see is you will see this here, which this is essentially your price, your low and your highs, and then your spread. You will see it. It will be showing okay, here it will be showing around here. I think this is your spread. This is zero spread, which is very good. You see, yeah, this has zero spread, which is very good. This is like a 1 pip spread, which also is very good. Of course, yeah, this is very, very low spread, guys. I love this already. So what you're gonna have to do is just you click here on your menu bar over here, and once you click there, guys, you will have a menu, and then the first thing that you will see is manage your accounts. You should go ahead and click that, not the rest of the. Yes, but you should click that. And then, of course, when you go to your accounts, here is when I was actually registered my account with Veracity Markets. I should pretty much, yes. This is my account. This is the demo account, of course, guys, that I am going to show you. 100,000. I didn't really use it, but I essentially used it for this lesson. Of course, let's get into it. Let's get into it. So what you have to do is that you want to click on your plus sign over there. Want to click over there so that you can get into the next thing that I'm going to show you. So what's going to pop up is that you're going to see this where you can search your broker, any broker that you have. As you can see the list, you can search your XNES, it's gonna appear. You can search Veracity, it's gonna appear. Gonna search your derivative, it's gonna appear there on your find your broker, and then you're gonna click on it. You're gonna click on it, search your broker, of course, click on your broker, and then what's gonna appear is this. So you're gonna search the server, guys. It's important that you should know which server are you on. It can be 1, it can be 2, it can be real server 2, something like that, you see. So you should know which server are you on. Here is Veracity Market Live. So you're gonna enter your login account and then your password, of course, and then you're gonna click here on the login, and then it should get you to your account. So thank you guys. I got a bit little disturbed by the slides, of course, but yes. Thank you for this, for listening to this lesson. And go, guys, please give me that big S, give me that big S. Subscribe, guys, subscribe, please, so that I can keep making more content, of course. Obviously, love you guys. Hope you enjoy the lesson, and then wait for more, guys. I'm gonna keep on creating these beautiful lessons, and I hope guys, when of course you finish listening to these lessons, you are going to begin your successful trading career. So good luck, guys. Keep on grinding, keep on hustling. Thank you.